So without further ado, let's get right into what the charts are looking like at the moment. And as you already know, we usually start with the indices. All right, so we're going to be starting with DXY, which is the dollar index, and helps us understand what we can expect from the dollar. All right, as touching whether it's strength or weakness. All right, so I have the zone marked up on US dollar, and currently you can see that it's price almost tapped it. Okay, but that reaction that I'm getting from that zone is honestly not satisfactory enough. All right, and that's why, considering the fact that, let me go to the 1 hour so that you can probably see this clearer. Considering the fact that there's a huge likelihood of that we get I'll get a divergence, all right, around this zone that we're at right now. There's a huge probability that that happens. Okay, venture from this other block. All right. So these zones could be taken as liquidity, areas of liquidity. All right, so the price can tap into this zone. All right, tap into this zone, then drop this much, and then we can possibly get that spike. All right, because the main move that I'm actually waiting for this week is going to be that spike, because it's been a long time coming. All right, and from all indications, that spike is most likely going to create a divergence on the daily time frame, which would then bring us to possibly, maybe first of all, this point, all right, before we continue lower. So that's basically my expectation from the US dollar. A retest giving us a double bottom plus the possibility of a divergence, and then we can start to anticipate some bullish interactions or bullish movements. So let's go to BXY, which is the pound index. And let me start from the weekly first. This was an analysis I did that was in September, and I talked about the fact that price will retest the bottom of this channel and then spring higher, which we can all already see that that's happening already. All right. However, we have created the possibility of a divergence. Or should I say convergence here? Yeah. All right. Please mute your mics. Please kindly mute your mic. Okay, so which means that price most likely coming here. All right, we're most likely going to see price come into this zone, all right, to give us that reaction based off of this imbalance that we're seeing right here. All right, you can see that there's this imbalance here. All right, there's this convergence over here. Okay, and if you go to the daily time frame, you also be able to confirm that there's the 200 moving average on the daily time frame, which means that price will most likely tap into this zone and drop. All right. So in the meantime, we can expect some temporary strength from the pound. All right. We can expect the DXY to be a bit higher. All right, we can expect it to go a bit higher based on this movement that we're seeing right over here. All right, so comes higher into this zone. All right, maybe most likely does something like this. Comes higher into this zone, and then we get that drop. Okay, so that's my personal bias from for GBP. Yeah, so it's more like a buy to sell kind of situation, all right. But the longer move is definitely going to be that sell move, because if you check, this was the last bearish break of structure that we got. All right, and then price coming back to retest the supply zone that gave us that movement. All right, simply means that we're going to most likely get the liquidity taken from all these areas, price coming into this zone and then bouncing possibly back up if that remains the bias at the time. So next we'll look at CXY. All right, we'll look at CXY right about now, which is the Canadian dollar index. And looking at this, you'll see that this is an analysis that I gave since as far back as early October. All right, and you can see that price has played out according to every single movement. All right, we've gotten the touch here. All right, so this is the move that is currently playing out. And after that move, I talked about the fact that we will be expecting this drop. All right, so that drop is what is currently happening from this other block here, or this supply zone over here. Okay, which means that for me, I think I'm expecting the Canadian dollar to drop maybe this much. All right, possibly come this low. All right, before we can see any similitude of a bullish price action. All right, before we can start to anticipate anything bullish whatsoever. So that is for Canadian dollar index. We're still bearish in our bias, right? Expecting the price to dip lower. Then the next one we're going to look at is the EXY, which is the Euro index. And as you can see, the Euro index has also played out perfectly well. All right, from our early October analysis, I talked about the Euro index coming this way. All right, and after getting into this other block, springing all the way up. All right, and you can see that that has played out perfectly well. All right, I'm sure that everybody can see that that has played out perfectly well. All right, so these are not gimmicks. These are not. This is not magic. All right, there's real solid technical analysis at its best. All right, and this is something that for those who will be signing up for the what's it called now for the boot camp, they're going to be experiencing this live and direct. All right, in all of its beauty. Okay, you're going to be seeing the exact approach that I take to the markets, to my analysis, and what exactly is responsible for my impressive success rate when it comes to market predictions. All right. The bootcamp is going to be starting from, I think, early next month. All right. Starting early next month. It's just $50, which is a 90% of the usual price. All right. Which is a 90% of the usual price. And it's basically as a way of giving back to the society, since this Sunday is going to be my birthday. All right. So it's just an initiative to give back to as many people as probably have been considering joining the mentorship, but couldn't afford it. All right. So you can easily take advantage of that. So this is EXY. We're expecting it to temporarily get stronger. All right. Tap into this supply zone. All right. And then we can get that drop. Thank you so much. Thank you so much, Mr. Moses. Thank you so much. I really appreciate it. So this is EXY. I think we might also want to take a look at NZD before we look at JPY basket. All right. And as you can see, this is NZD. It's still not giving all of the reaction that we're expecting, but I think that we're seeing something quite good. This was also an analysis since, since that was July, but I'm not sure that this chart has been updated ever since. All right, so let's just go to JPY basket. Thank you, Mr. Ayobami. Yeah, so this is the yen basket. All right, and as you can see, my prediction, this was the early October prediction that it was going to drop. All right, then followed by the late October prediction that it was going to spike higher, then drop. All right, so currently this is the spike higher. All right, you can see that I already have my Fibonacci marked out, and the demand, the supply zone also marked out. All right, and what does this mean? This means that personally I expect price to do this, all right, then this. Okay, so we could get to see some temporary strength in the JPY basket as well. All right, So the JPY could temporarily get stronger for say about 2-3 days before we get that solid drop. Okay, for those of you wishing me happy birthday in advance, thank you so much. All right, but beyond the wishes, it takes more than wishes to have a happy birthday. All right, so thank you for the happy birthday wishes, but also make the wishes come with things that can make a man happy. So the Lord bless the hearer and do up His word in Jesus' name. Amen. All right. So we're gonna go up next to the majors. All right. We're gonna start with the Euro USD. All right. Let's start with Euro USD right about now. Yeah, so this is Euro USD. All right. My initial bias was that Euro USD was going to fill up this imbalance, then drop. It already played out that move. All right, but then I marked out this area as a possible zone, but price didn't react from there. So let me take that off. I also had this zone marked out. Price didn't react from there. This is where price is currently reacting from. All right, that particular zone is where price is currently reacting from. But let us check how far that movement is most likely going to be. All right, from the 4 hours time frame, I think the movement is going to bring us down here. All right, it's going to bring us down here. And then we'll get the spike up, then the drop down. Okay, so that's my bias for Euro USD. All right, it's going to be a sell to buy to sell. All right, so that we can also tap into this this supply zone and the very strong resistance level over there. All right, and then we can get a much clearer or a much cleaner drop. All right, I usually prefer to trade movements that are consistent, all right, that are not sluggish. So I like to get some good momentum on any movement that I'm going to be trading, and I think that this final sell will definitely give us something interesting. This initial buy also, all right, is also going to give us something interesting. I am personally going to be giving updates to everybody in the mentorship group during the week. We're going to be having about 2 streams during the week, 2 live streams or live trading sessions during the week, so that everybody can have a taste of the pies that we're preparing, that the market is preparing rather. So it's either price reacts from this other block, all right, this demand zone over here, or from this level over here, either of the two. But I think my chips are going to be banking on this one first of all. Yeah, my chips are going to be banking on that one first of all. And then thereafter, we can start talking about the bullish movement that price could have in store. So up next, let's look at Gbpusd. 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 Gbpusd has been a sweet one. All right. Let me take this off. This was the break of structure. Price came all the way back to retest into this other block. As you can see, this was my analysis. All right, we'll get bullish a bit, and then come to the 88.2, the supply zone over there. All right, I'm sure that my students can recognize what exactly happened there. And then price is dropping right now. However, on the 4 hours time frame, let's take a closer look at what we have here. I think on the 4 hours time frame, there's possibility of something else entirely playing out. All right, from the 4 hours time frame. Let me see how best I can explain this. I need to clear up some lines first. Apologies. Bear with me. So I think that price could, first of all, do this. All right, first of all, do a spike higher. All right, maybe when market opens, we'll get an initial spike higher. All right, before the real drop happens. All right, and the purpose of the spike will be, to take out those who had open positions over the weekend. All right, who felt like, oh, all right, we've already probably put the stop loss at break even or whatever it is. All right, so that spike is most likely going to clear out their liquidity, clear out their position from the market before the actual drop happens. right before the actual drop happens. So I think that I'm going to be expecting that to play out in a couple of hours from now, right? And then from there, we can start to take our own entries all the way to probably 1.080001. Okay, so that's GBPUSD. If you have a commodity you'd like us to take a look at, please don't hesitate to drop it inside of the Telegram comment section. All right, and then we'll get to address it as soon as possible. So that's GBPUSD. I think the next one we'll look at right now is USD/JPY. Temporary weakness on the dollar, and then please mute your mics. Please mute your mics. So temporary weakness on the dollar, and then we're looking at temporary strength on the JPY basket. And this is USD/JPY on the daily time frame. Let me clear all the drawings so that we can take a look at it from a more holistic point of view. And you see that we have this zone over here. I'm not sure everybody will agree with me that it's a zone, but I think that my students will know why exactly that is being considered a zone. All right, we have something around here. Okay. So from here, we're seeing price giving the reaction. So there's a huge possibility that since we're looking at temporary weakness on the dollar and then strength from the yen, all right, temporary strength from the yen, there's a huge possibility that price, taps into price taps into one of these zones and then begins to react. Okay. This would be the main area that I'll be watching out for. Or maybe perhaps even somewhere here. Just maybe. It's a long shot, but I think it's possible. So let me just mark out this area. This. Okay, so this area. So from the 4 hours time frame, let's see that clearly. From the 4 hours time frame, I think the expectation would be my bias is get this, then possibly this. Okay, something along that line. Okay, something along that line. Let me change this. All right, so that is for USD/JPY, and I think I'm seeing a couple of requests in the chat box already. US 500, then CAD GPY. All right, I think this was analysis we did. I'm not sure I've done any analysis on USD/JPY or US 500 rather in some weeks. Right, but as you can see, the bias is still the bias, played out perfectly well. We got a huge buy from this demand zone over here. All right, from this demand zone over here. All right. Then currently we're seeing price struggling with this resistance line that I drew from the daily time frame. All right, based on the daily time frame, it's just a resistance line, nothing much to it. All right. However, I think that US 500, we're talking about temporary weakness on the dollar, so we could see this, then this. All right, so we could see a temporary buy. All right. some temporary bullish movements, okay, and then from the bullish movements, then we can anticipate a sell from this huge supply zone. All right, that's a high probability supply area, so I think that we should get some tangible movements from right over there. So that's US 500. Let's take a look at CAD JPY. So as you can see, CAD JPY has not yet tested into any of my entry points, and I think that this week we'll most likely be getting this entry. All right, we'll most likely be getting this as an entry. All right, CAD JPY. This past week was quite terrible. I really didn't see so much momentum in the market, but nonetheless, I think that CAD JPY would most likely test into this area and drop a little bit. All right, and after that very small drop, maybe even this much. All right, and after that very small drop, we push higher into this zone. All right, to complete the major drop. All right, remember we're expecting the Canadian dollar to be a bit stronger. All right, at the moment we're expecting the Canadian dollar to be weaker. All right, the Japanese yen rather to be stronger, and we're seeing possibilities of a weak Canadian dollar. All right, which means that when price literally comes higher this way, bounces off of this area, comes back to this point, takes out the liquidity from the trend line, we'll literally get a test of this zone and then the drop. All right, and then the drop. So that's the expectation. Please endeavor to mute your mics so that we do not compromise the audio quality, please. So that is CAD JPY. All right, and the next request, CAD CHF and Gbpjpy. Yeah, so this is CAD CHF. I think those in the mentorship group, those who just completed their trainings will remember this huge sell was a setup that we had and we waited for several days. We waited for it for several days until it finally played out eventually. All right, this was about how many pips moved? Let me quickly check. Yep, over 340 pips move. So right about now, I think we've broken structure over here. All right, we've broken structure at that point, which on the 4 hours time frame leaves us with a couple of options. All right, leaves us with a couple of options. The first one would be that we take out liquidity from here. All right, perhaps we take out liquidity from here. And after taking out liquidity, price comes this way. All right. Price comes this way. Then we eventually get this. All right. So that's my bias on CAD CHF. However, remember the Canadian dollar is expected to be weak right now. So this movement may not play out immediately. Right? It may not play out immediately, but trust me, it is a movement that is almost guaranteed to play out. Right? It's almost guaranteed to play out. We've put that card. We've seen that. We've seen the possibilities of what CAD can do. All right. We've seen whatever it is that CAD is most likely going to be capable of doing in a few weeks or months. All right. So, but this is my bias on CAD CHF. Since we've broken structure bearish here. Right, broken below this other block. All right, broken below this one as well. Below that low. We've broken below this low as well. Weekly time frame. Anything interesting? Not really. Not really. In fact, I can see that this feels like we just took out liquidity. All right, equal lows liquidity, which means that price is most likely still going to target this area. All right, price is still most likely going to target that area. So we should see price come lower into this zone, all right, before we see any possibility of a bullish movement back to the top on CAD CHF. All right, so that's my bias on CAD CHF. I think the next one is Gbpjpy and gold. Yeah, so this is Gbpjpy. I don't know if I should clear all these lines. So these lines actually represent the overall bias from the monthly time frame. Okay, but let me play a couple of them that I've already let's touch with the market. All right, so I think that JPY is temporarily strong. All right, we could see some weakness in a few days or weeks or whatever. All right, so on the daily time frame, I think it's safe to assume that GJ would want to complete this this QML pattern. All right, that would be a safe call. Okay, such that we possibly get to see GJ. Sorry, let me check the files quickly. Okay. So I'm saying this imbalance here, possibility of this playing out as equal-wise liquidity grab. All right, such that we get this and then this. All right, very, very likely. Okay, it's all still part of the overall AMD pattern. All right, however, I'm saying that sorry, let me. Yes, so this is around the 764. All right, that one is there, and this is around the 82. So if price comes this way and then drops, it's still all good. We could catch off. We could quickly scale about. Let me see. Yeah, we could get about 350 pips off of that move if it plays out accordingly. All right. Then maybe possibly before we get that huge spike, maybe to this area, so that we can now trade the Fibonacci of this whole movement. All right. So maybe to somewhere around here or here. All right. And then the drop. So that's GJ. My bias is that we should be bearish after probably after Monday. We should be bearish on GJ. Then the next commodity, according to your request, is AUD card, right? AUD card and then gold. Yeah, so this is AUD card. I had this zone marked out. Price tapped into it, reacted perfectly from that zone. All right, it's quite unfortunate that last week for me, I wasn't really settled because, like I said, we had short programs and a whole lot of other things to plan for. Or at the end of the year, and it was a really tasking week. All right, so basically, what we're seeing right now is the reaction from the retest of this accumulation zone. All right, and I'm naturally going to expect that this gets taken as a liquidity grab. All right, same as this. All right, this has already been taken. Equal lows, liquidity already taken at that point. All right, and what I would naturally expect is I have two options here. First option would be that price does something like this. So that we come and retest this point. All right, so that we come and retest this point. Take our liquidity there, enter into that zone. That's possible. Let me quickly check AXY. Yep, AXY is still bullish as I expected it to be. However, I think we're approaching the first major resistance. Okay, and I think we've gotten a reaction from that resistance already. Okay, so AXY or Australian dollar is quite weak at the moment. CAD is also a little bit weak, but probably I think we'll see AXY drop a bit lower. All right, so AUD CAD could be much weaker than the CXY. So let's see price drop into maybe somewhere around here. All right, or here. All right, most likely here. And then we'll get that bounce back up, all right, before the main drop that should bring us all the way back to this point. All right, should bring us all the way back to this point. So that's AUD CAD, all right. And then finally, based on your request, we're going to be looking at a gold XAUUSD. All right, we can all see gold executing a perfect dump, all right, or let me say semi-perfect dump. Liquidity grab, all right, from that zone. Okay, and I think come in. Yep. And there's that zone there. And what I'm naturally expecting is that from that zone, price gives us hold on. Let me go back to the 1 hour. Price gives us something interesting to talk about. All right. Because like I said, when we looked at the dollar, we talked about the dollar getting temporarily weak. Let's quickly confirm that. Yeah, getting temporarily weak to find strength around this area, and then we can see the major buy play out. Okay, so gold is a buy to sell, all right, at least according to my own analysis. And but these are my own opinions, all right. This is my own personal view. I am not a market maker. I'm an analyst and a trainer, all right. An analyst and a trainer. So before you take any of these setups, be sure to do your own due diligence, because like I always say, trading CFDs or trading commodities comes at a risk. All right, your money is a risk and you can lose everything at once. Okay, and that's why you must practice proper risk management. It's non-negotiable. Okay, it's absolutely non-negotiable. So you can see that this zone is in between 618 and 764. All right, which means that we could get to see some solid movement from that area. So that's good for me. All right, price coming into this area, then dropping back into this region. Yeah, literally after we've taken out that imbalance and then we fill up the imbalance. After we've taken out the liquidity, then we fill up that imbalance. Okay, this is even visible on the daily time frame. So let's do this way. Yes. All right, I think yes. Oh yeah, that's it. So quickly before we go, I don't think we have any other inquiries or any other commodity requests. So quickly before I go, all right, I just want to quickly point out a couple of things. The year is about to end, all right, which means that banks and financial institutions are going to start wrapping up. Banks and financial institutions are going to start wrapping up their activities for the year, all right. You're going to see a whole lot of crazy movements in the market, all right, because investment houses are going to be cashing out so that they can pay all their investors, all right. Companies like BlackRock and several other investment firms, okay, all the positions they have taken since probably January, February, March, even as far as May, all right. Some of them are going to be, closing out on those positions so that they can share profits to their investors, all right. And as such, you're going to be seeing crazy moves in the market that are not as a result of news, all right. You're going to see crazy movements in the market that you didn't even see any news release for, right? It was just majorly from banks that are consolidating their profits for the year, all right, or financial institutions that are doing exactly the same. Why am I saying this? Be very careful, all right? High volume or highly volatile movements are not only going to happen because of news anymore, all right? There's news, and then there are also movements that are going to be taking place because, all right, because of certain movements that are being executed by all those big investment firms, banks and the likes. All right. So I think that should do it.